So let's talk about Goldman Sachs. You know the name, of course. They're a giant in the world of finance. But right now, they're in the middle of this huge, fascinating pivot. They're ditching some of their newer, less successful projects and going all in on their traditional strengths. They're basically calling it a renaissance in the art of the deal. And honestly, it's a story about focus, incredible timing, and a really, really big bet.
And look, this isn't just hype. This comes straight from the CEO, David Solomon. When he says this is a top decile opportunity, he means it's one of the best environments for making deals that he's seen in over a decade. Think about that for a second. That's not just optimism, that's a signal of extreme confidence. It really sets the stage for just how high the stakes are for them right now.
All right, so here's how we're going to break this all down. We'll start with why deal making is so hot right now. Then, we'll get into Goldman's new game plan. After that, we'll look at the bull case and the bear case, and finally, what to watch for down the road. First things first, let's talk about the market. You see, after a few pretty quiet years, the world of mergers and acquisitions, M&A, is absolutely buzzing again. It's like all the ingredients came together at once. Companies have tons of cash sitting on the sidelines, there's pent-up demand to make big moves, and that's creating this perfect tailwind for a company like Goldman. And when I say it's a tailwind, I mean the scale here is just staggering. In 2025 alone, Goldman advised on $1.48 trillion in M&A deals. To put that in perspective, that's almost a third of the entire global market. They are, without a doubt, the heavyweight champion in this arena. And this right here, this is why they're so confident. See, a backlog is basically their pipeline of deals that are already signed but just haven't closed yet. Think of it like a restaurant that's fully booked for the next 6 months. A 4-year high tells you that a massive, predictable stream of revenue is already locked in. It's probably the clearest signal you can get that clients are betting big, and they're trusting Goldman to handle their money. So the timing looks perfect, right? The market's hot. But to really take advantage of this moment, Goldman had to clean up a very expensive, very public mess that was really distracting them from what they do best. And this was the big problem. A few years ago, Goldman made this huge push into the world of everyday consumer banking. You probably heard about Marcus, their online bank, and the big partnership with the Apple Card. It was a bold idea for sure, but it ended up being a multi-billion-dollar headache that it just lost a ton of money. So you can really see the before and after here. The old way was this kind of scattergun approach, trying to be a bank for absolutely everyone. The new way? It's a laser focus. They're getting back to their roots, their core investment banking and trading, while also doubling down on their massive business of managing money for corporations and the ultra-wealthy. It's really a back-to-basics move. And the result of that new focus? Well, you can see it right here in the numbers. This is where the money is actually being made. The two gigantic engines are global banking and markets, that's the M&A and trading powerhouse, and the super important asset and wealth management business. And that noisy consumer business that caused all the drama, it's basically a rounding error now. Okay, so they've changed their strategy. Big deal. The real question is it actually working? Well, the numbers seem to be shouting a pretty clear yes. And this is really the heart of the bull case for the company. Let's just start right at the bottom line. For the full year of 2025, their earnings per share grew by a whopping 27%. What that means is they've become an incredibly efficient machine. As all that new revenue from the M&A boom started pouring in, a lot more of it was dropping straight into profits. Now, this next number is really, really key to understanding the new Goldman. It's a record amount of revenue from what they call durable financing. Think of it this way. The big M&A deals are like exciting home runs. This is like getting a runner on base every single inning. It's the steady, reliable, recurring fee income. It makes their earnings way less bumpy, and Wall Street absolutely loves that kind of predictability. And finally, if you want the ultimate sign of confidence for management, here it is. They've got the green light for $32 billion in share buybacks. They're taking their own cash and buying their own stock off the market. It's a massive vote of confidence, basically saying, we think our own company is the best investment out there right now. Okay, so the bull case is strong. Everything sounds amazing, right? But, we have to be realistic here. It's never a one-way street. So what could possibly go wrong? What could derail this whole renaissance? And really, it all comes down to this one simple question. Goldman is riding this absolutely massive wave right now, but we all know that waves eventually have to break. So the folks who are cautious, the bears, they're looking at three main things. First, this whole party is tied to the economy. If a recession hits, companies stop buying each other. It's that simple. And that beautiful backlog we talked about, it could dry up fast. Second, you've got regulators. There are new rules being discussed that could force banks like Goldman to hold way more cash in reserve. It's safer, sure, but it ties up money they could be using for things like those huge buybacks. And finally, yeah, there's still cleaning up the mess from that consumer banking experiment. There's still some lingering costs and headaches to deal with. So, let's wrap this all up. With the good and the bad in mind, what's next? If you're following the Goldman story, here are the key things you're going to want to keep on your radar. There are three big ones. First, their very next earnings report for the first quarter of 2026. That's our first real check-in to see if this momentum is for real. Second, watch how quickly those deals in the backlog are actually closing and turning into cash. It's one thing to have a deal lined up. It's another thing to get paid. And third, keep a close eye on their private credit business. They have a massive goal there, and if they hit it, it'll create another powerful, steady engine for the whole firm. So when you strip it all away, it really boils down to this. Goldman Sachs has bet the house on its core identity, right at the moment when the timing looks absolutely perfect. So, is this a strategic masterstroke that's going to define their next decade? Or is it a massive gamble on a hot market that could cool off just as fast as it heated up? It's a fascinating question and one we'll be watching very closely.